I'm Hafiza Habib, and I will explain first the question 1. How do gross profits, operating income, and net income differ? Gross profit is the amount of business that has earned minus the direct cost of manufacturing or the cost of goods sold. For operating profit is the amount of gross profit minus operational costs. And net income is the total amount left over after the business has accounted for all the deduction, including interest and tax. Question number 2. From the firm's perspective, how are dividends different from interest payments? From a perspective of firms, dividends are paid to the shareholders of the company out of the net profit earned during the period. Meanwhile, interest is paid to the debt holders out of the operating income. What is firm's net working capital, and what does it tell you about the liquidity of the firms? First, the meaning of the net working capital is the difference between a company's current assets, such as cash, account receivable, inventory, and the current liability, for example, account payable, short-term loans. For net working capital is a significant financial indicator that assesses a company's liquidity and capacity to fulfill immediate obligations. A firm is said to have enough current asset to cover its current liability if the net working capital (NWC) is positive, but a negative net working capital suggests that the corporation may have trouble paying its short-term debts.
Hi, my name is Firdawati binti Samleh, number matrix BB21110558. So for the next question is about the income statement. For the income statement, we have revenue and also operating expenses. The revenue, we have three, which is sales, cost of goods sales, and also gross profit. For the gross profit, it have RM 414,000, and also operating expenses, which is general and administrative expense, depreciation expenses, interest expenses, and also total expenses. The operating income is 414,000 minus 224,625, and also the taxes is RM 75750. So the net income is RM 113625. That's all about the income statement. And for the balance sheets, we have asset, liability, long-term debts, and also owner equity. For the asset, we have cash, account receivable, inventory, and also building and equipment, accumulate depreciation, and total non-current asset. For the total current asset, which is about cash, accounts receivable, and inventory, it is RM 737,700, and the total asset is RM 1685700. And for the liability, the total current liability is RM 358,200, which is the liability is about notes payable, accounts payables, taxes payable, accrued expenses. And also for the long-term debts, we have two, which is first total long-term debts and also total liabilities. So the total liabilities is RM 859,200, and also for the owner equity, total owners equity, we have three, which are owners equity, common stock, and also retained earnings. The total owners equity is RM 826,500. So the total liabilities and owner equity is RM 168,570. So for the conclusion, we can conclude that that equity was strong and closely, evenly divided with liabilities of the firms. Current assets provide excess capacity to service current liabilities. That's all from our groups. Thank you.